Hello, everyone. Welcome to today's webinar, Practitioners' Insights, Social Ventures and Investment Models, hosted by CFA Institute and CFA Society India. I would like to take a moment to welcome our audience from around the world who are joining us remotely. I am Sivanand Ramachandran, a CFA, and I manage policy advocacy for CFA Institute in the Asia Pacific region, and I will be the moderator for today's webinar. Before I introduce our speaker, I have a couple of housekeeping notes. Today's webinar is scheduled for 60 minutes, including Q&A. We will be leaving time for Q&A after the presentation. Please feel free to submit your questions on the Q&A icon at the bottom of your screen and typing your questions in the box. This presentation will be available to view after the presentation concludes in the chat box. We value your feedback, so please complete your evaluation survey before you sign off today. Now, it's my pleasure to introduce our speaker for today's session, Meera Siva, CFA. Meera manages the Shelter Venture Fund at the Ter Villager Center for Innovation and Shelter, Habitat for Humanity International, a not-for-profit organization that works on affordable housing solutions. She brings with her 16 years of engineering design experience in the United States. She holds more than 10 patents to her name and 11 years of financial analysis experience spanning US private equity, India listed equities, India early stage funding, and personal finance. She is a columnist for the Hindu Business Line. She is a CFA charter holder and has a master's degree in science and computer engineering. She has been leading the Chennai chapter for the CFA Society India since 2012 and is a board member of CFA Society India. Over to you, Meera. Welcome.
Thanks, Siva, for the nice introduction. It may sound like my intro is like master of many arts. Hopefully, there is something we can learn today from this. So I'll get started with giving a bit of an intro on what we are sort of talking about here today when we talk about social enterprises and social investments that go into these enterprises. This is a chart that I sort of like very much. I didn't put this together. I sort of picked it up. So on one hand, there are lots of problems in the society that require solution. Those may be like societal issues, like lack of gender equality or poverty, or it may be more the environmental issues like air quality or climate change, those sort of things, and these are issues that affect everyone, which affects businesses in their profitability and other, that's a whole area of ESG and others. But even more than that, we just want these problems solved, and governments sometimes look to other agencies beyond policies and the government's own work to solve these problems. And this is the spectrum we are, trying to look at. On one hand, there are charitable organizations, like not-for-profits and civil society, as it's broadly called, that try to work on it. That's sort of shown in the left side of my screen here. And then there are the traditional businesses that actually provide services that are useful. One example, maybe there is garbage that needs to be collected, and you can look at it as a traditional business that has the service contract to remove it from your apartment complex or from the municipality and get it done in a model that is profitable for them, and they may feel that they can jump the garbage somewhere because that sort of makes sense for them. They consider their business as like removing the garbage, right? And they do that properly. On the other hand, there may be like charitable organizations which look at trying to create awareness or doing some campaigns or trying to find a model where garbage is collected, maybe not much payment is required from the residents because either they are not able to pay or various other reasons, and they do it because it just needs to be done and there is no business model for it to do, right? So those are sort of the two extremes, but that's not what we are here to talk about. We are here to talk about something that's in the middle, which is a blend of there is a good social problem and there is a model that sort of works a bit sustainably, if not hugely profitably, and then there is a bit of a balance, and then there is a spectrum. That's where I would you will see this word spectrum used often, because it's never a this end or that end, because there's a huge variety of enterprises and investment models that are in the middle of the spectrum, and depending on where they are in the spectrum, they could be classified as more towards the non-profit side, and they are just sustainable, or they are more the socially driven business, which is there is profit as the goal, but profit is not going to come at the cost of harm to the society or other such expenses. It may be better illustrated with one or two examples, and these are two from the portfolio that we have in India. Ours is a fund which kind of works with these social enterprises, and our investment model is a bit leaning a little towards the left rather than on the right side, on the impact side than on the profit side. So the one on the top right is a roofing solution, and as you can see, these are roofs in various slums and low income housing markets, and the roofs are of poor quality. They develop leaks. It is hot with these materials that are there. In the past, it was asbestos until it was later banned and whatnot, and when it rains, there's a lot of noise, and various issues do come about this. And this company Modroof has developed a new roofing material that is lower cost than a RCC roof. It has long life, and it is made from sustainable material. It provides thermal comfort, there is soundproofing, and all the benefits that you may expect from a RCC roof, but at a lower price point that is affordable. And he has also built a business model which is working with microfinance companies to make these roofs actually accessible, because nobody will be able to pay. No roof is possible, without thousands of dollars of thousands of rupees of payment. And so they have worked out with microfinance companies to do that. So that's one, which is a little more to the left, because when there was COVID, for example, they said they had people who had started on the roof work, and the head of household and whatnot passed away with COVID, and he completed the homes without getting payment, because that was just a humane thing to do, right? So you do work with those vulnerable population, and you sort of have to absorb those things and make that work. On the bottom and left is another one of our investments in India, based in Chennai. So they do 3D printed homes, and they had done affordable home, which is low in small size homes that are done quickly with less material, because 3D printing can be very efficient in the material use and hence cost reduction. And this is one which 3D printing of homes or 3D printings of anything could be a very good business model. I mean, this could be an enterprise very much on the right side of the spectrum. But here is where we try to push it a bit towards the left to say, how can you do all of this in a way that is also usable to the low income housing market, use sustainable materials, and reduce the climate impact, right? So this is just, as I said, a spectrum. These two are not exactly comparable, but those two could fall in the social enterprise spectrum. And I thought at this point, we can pause to see where everyone is from, so that I'm not trying to say very elementary things. If you can say, if you're not from this space, and all these so far I talked is very strange phenomena to you, or this is all stuff and we can try to get more to the nuances of the sector, so that I'm not talking over people or, talking down to people at this point. Okay, so whenever we are at maybe a few seconds.
So, Meera, like we wait for the polling results. I have a quick question on the chat. Are there any early stage startups doing these social activities, right? So, or where do these kind of startups lie in terms of their evolution? And what is the risks and challenges when it comes to doing these social activities? If you can give a quick answer there.
So yeah, there are early stage startups doing this, but usually in the more early stage, what happens is people do need to find their business model and right, their what works in the more broader segment before they may be able to focus on this segment, right? So usually the impact focus is a little less in the earlier stage, and impact kind of philosophies do come when there is a little bit more scale, and scale also brings economies of scale and affordability and various other aspects to focus on, right? So while they do start with the early, shall we say, gene of doing it starts to actually work in slightly later stages.
All right. All right. So
It's a
we
quick
have the
answer. Yeah.
polling results have come, right? So clear.
Okay.
Yeah.
So many are not in the social impact stage, and there is a mix on the other side, and many are not on the debt side. So maybe we can, there is not a lot of debt focus. So we can, actually go through the slide deck and try to talk to people, assuming it's okay to state what they may not know. Okay. Okay, moving on. Okay, so this is a very popular, colorful slide, which hopefully everyone has in some way or form seen. This provides a great framework, the Sustainable Development Goals, to say that what is our end goal in this. This used to be called the Millennium Development Goals. So these are like the 17 focus areas where we say, like, these are the problems of the world that we want solved, and this is the framework in which the social enterprises and investors to look at. And the good thing about this is there is one common language we speak, which actually I will emphasize, multiple times, and right, we'll also come to it when we look at the impact and measurement angle, where this is a real problem because we are bringing people who do not speak the same language. On one hand, we have these charities and such, they really talk a different language of development language, and then there are the people on the right who speak a lot of finance, and everyone has to get together to get the job done. And finance is important, and so is the impact and all of that. So this tries to provide a bit of common language and metrics that everyone speaks and people understand each other a little bit more. And as Siva said, I do have a bit of background in the media space and writing, and words are important. And when you say sustainable, what do you mean? And right, when I say sustainable, what do I mean? Right, like, for you it may be just financially you're able to keep going, but for someone else it may be like it also works for the environment, and it is multi-generational and whatnot, right? So words can be ambiguous, and this tries to solve those problems. And to talk again, the more common language of what is the sector you invest in. People may say, we are edtech or education or healthcare or livelihoods. These may fall under multiple SDGs. For example, you work on girl child's education so that they get better jobs. This may span 2 or 3 SDGs as listed there, but this may all come under yeah, one goal here. So and moving on, so that's the sort of sector and work. And if we say what is the investments like on the left, there is the philanthropy, which says that you're doing good work, keep doing, and they have their own metrics of what is the result they want and all of that. And then next to it is venture philanthropy, which is there is a little bit of I will also measure some social return, and if I can get a little bit of sub-market financial return, right, which is sort of shown in the social investing space, where there are, again, it's a bit of a spectrum. And then moving a little more to the right, we have what's called the impact investment. Impact and social is only in the bit of degree. Both want social return, both want financial returns from their investments. It's just how much is the difference. And moving a bit to the right, we have sustainable and responsible investing, which is, you can think of it as ESG-ish, where they want financial market rate, but they also want some social return, right? I mean, they may not have very strict metrics, but at least that it should not come at the cost of the society or the environment. So the investors we would be talking about, or what is called the social impact investing, are the ones that are a bit in the middle, who want this double bottom line, as it's called, social return and financial return. And I just want to pause here and say that, look, there is no free lunch, right? I mean, you cannot have no risk and high return, that sort of thing, right? Like, I mean, we have all learned that. But if you ask, like, well, how is it that people are expecting social return and financial return? Is this even going to work? The jury is out there, but I think I want to go out and say that yes, it's possible, because often what happens is the society wakes up to some problems a little later. But then if you are able to see that, I think this is a problem, like, maybe waste plastic recycling, or cleaner mobility, those sort of things you think, or reducing water usage in agriculture, are problems that you are working on, and then that becomes a more endemic issue. Then your investments can give you social return and even above market financial return, right? So it's all in, is it possible? It's possible, and that's the alpha sometimes you can look for. I'll just put this slide out there, that who are the kind of investors who are making these investments in the middle segment. And depending on the stage, they may be angels, depending on the size of the investment, they may be larger ones. If it's debt, you could have financial institutions, banks, like, the National Housing Bank, or, there is all this SIDBI kind of organizations, and private ones like Avishkar and all that. So I'll leave the slide and not read it out. And maybe, Shiva, if there are any questions till this point, we can take it on before we move to the slightly next segment.
Yeah, so there are a few questions coming through. So one question is, how easy or difficult to align with SDGs if there is not a well-defined government policy? So, like, or in other words, do you also need to, like, SDG is something that is defined by the UN and so on? Does it also need a supportive government policy, or, like, it's not a necessary condition for investors to adopt?
Right. So any work usually in the social impact space works well when the government also gets on board, right? Because these policy initiatives drive some change. For example, if you say that people need to have wastewater treatment units in their residences and whatnot, those will not get done. No one will voluntarily go and invest the money and do, because that's just the right thing to do. Whereas if there is a regulation in your municipality or wherever, then people would do. I mean, I was talking to someone in Central America, and they said the government requires, the municipality requires that when a building is demolished, you have to actually collect the waste, bin it, and then give it away. I mean, like, someone, you have to pay someone to pick it up, and they would make new building material out of it. And it is mandated. That's only when you show that you have done it, are you going to get your building permit to build a new one. Then, that sort of promotes a bit more of that work. It's not mandatory to do it only when it is there. It certainly helps to align, and that is where some of the work where the charitable ones or these grants and others do, is to build that awareness and give that enabling environment, so that these enterprises and the investors' returns are better.
Yeah. No, I remember, like you, I grew up in Chennai, right? So one of the issues is water problem, always, right? So, and we used to have this rainwater harvesting. I think the government kind of mandates rainwater harvesting because water scarcity is an issue. And then it enables, like, so for example, somebody to come up with a business model, which is kind of cheaper to do that kind of a thing, right? So I think there is a problem and there is a solution, but also, I guess, if you have something that enables it, like a mandatory this thing from the government, I think that certainly helps, right? So there is, it's certainly feel there's something there. So I think there are a few questions which are coming up around measurements and metrics. So I think
We will come to
we'll
that.
come to
Yeah,
that.
that's
Yeah, we'll come to that. I just had one more question. Since you, at the beginning, I think one of the solutions you mentioned was rooftop, and one of the solution and one of the use cases, it was low cost materials and so on. And you also mentioned thermal comfort, right? And I think I was immediately thinking about all the heat waves that's going on in Europe. And one of the things that they mentioned, like, places like UK and so on, is that you need to retrofit buildings with thermal insulation and this thing, and otherwise it's just going to be expensive, right? Start installing ACs everywhere in the Western world, and that's it. Your carbon emission goals are going to go to a toss, right? My question to you is, do you see the value of these solutions, low cost solutions in India, having a market like in the Western world as well?
Yeah, there are, so those are the things that create that alpha for the social impact investors, right? To my point on, can these deliver social return and be profitable? So some of the problems that were probably mostly in the, I guess, developing worlds, are also seen in many of the developed world. One example I saw recently, also allied to this energy use, is just the cooling and heating, right? These thermostats and all these controls, which is a big deal here, because our power costs are high, and all of that. And there are really good solutions that are IoT based, and sort of integrating all the way to the cooling tower and all that. And these are the solutions that are now getting developed in the more developed worlds, because they never had this problem of, I need to save energy so far, right? Like, I mean, this for different reasons, right? For us it's slightly different, but it's the same problem that's sort of coming up. And I am finding that the solutions we have here definitely are very reusable there. I mean, with a little bit of tweaks to that local market, and there is a huge opportunity there, and that's where the social doing good can also give you money. Yeah.
All right. So why don't you continue the presentation?
Yeah.
And
Okay.
take
Yeah. So if we look at so those are the kind of sectors people work on, and those are the kind of investors and all that. Now, what do they invest with, right? And this is also a spectrum of tools that are at the disposal of the investors. Anything from a simple loan, which could be micro, and this is kind of the same you will see in some of the things that we talk about, is not something that is very exclusive only to the social and impact investment space. These are instruments that are also available and very much there in the regular investment world also. But there are some nuances to the same tools over here. For example, one of this is maybe like a grants or conditional grants or viability gap funding sort of grants, and different ones based on the specific project and the specific sector and the issues in that market. In some cases it may be based on the geography and others, and the idea of these is that, and in some cases you may have to use multiple of these to create what is called a blended capital, because you say that, look, it's not just enough that this company raises some debt and some equity, right? I mean, the debt equity is not the only one. You may need to get some first loss default guarantees from someone who's willing to underwrite the risk so that a bank is able to lend to this organization, because that's the need profile of the end customers or the organization, or where they are operating and all that. So there is often a bit of a complex model that you may need to build around these to create whatever is the right capital structure and the instrument that is suitable for that company at that stage. And this one is a little bit of a repeat of that. So the extra flavor brought in here is you also consider what is the stage of the investment, right? I mean, early on there was this question asked on, do you see this in early stage or is it more in the later stage? This creating a social impact and solving a social problem, it's usually a seed that right, that's always the startup story, right? The founder finds a problem and then they ask, why is it like this, and what else can I do, and all of that, and that's just how the company starts up and evolves. And all these options again are available not just to social enterprises but to pretty much everyone. It's just who's the player and what is the DNA of the player, which defines what's the kind of questions they ask, and what defines something as what makes Omidyar social impact venture capital versus someone else who's not, is just this shades of what they look for when investing and what is the outcomes they look for. The only difference which I've sort of circled here, maybe one may be these green bonds and the other is this social stock exchanges, which is a bit of a new concept that the government is also trying to come up with this to promote everyone in the spectrum, from not for profit to the social enterprises in that spectrum, to list themselves in these exchanges and raise some money so that there is access to a lot more capital than just be limited by the vagaries of these few investor and their goal. And that can sometimes be a bit of a complication for some, which comes to the point of this, what about these SDGs and all that, right? Because some may be like very narrow and say, look, and I mean, like, we may be one example where we say, well, we focus very much on low income housing startups, and then if someone is sort of on the periphery, we may say, well, you're not in our mandate, and they may be in nobody's mandate and all that. So this tries to broaden the access to capital and bring a lot more transparency, because many of these questions would be like, it depends for some of them, and there is lack of data and accounting and accountability and all that. So this is trying to solve those issues. I'll pause there because
Yeah,
I
so
see Siva.
yeah. Right. I mean, I had to ask, right? Like, since you mentioned social stock exchange, so SEBI came out with a social stock exchange, and like, so now it's operational. So can you talk about, like, your views on how it is like working, or what you're hearing from investors or entrepreneurs about the social stock exchange, which is kind of very recently operationalized, right? So it's been in the consultation stage for quite some time.
Right. So I think the two favorite words, the favorite phrase is, it depends, in everything in the social impact space. It 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 is a bit early, right, to see how things are panning out. And the example I would give is like, REITs, right? That it was much touted, and after so many years, we only have 3 listed REITs, right? How good is it? It's good, but we are not seeing that bit of pickup and traction in that space. So I would give it a bit of time. And I am, while I'm hopeful, I think it's a great idea and I hope it works. One also has to be cognizant of coming up with new ways to raise public money, and making that successful is not an overnight job or an easy job, right? Like, we have had so many small business exchanges, right, that are there beyond the main bourses, and they are yet to pick up the traction and the investor trust, right? I think that's the more critical factor, that who goes there first, how do they perform, and what is the governance and all that others start to feel that, yeah, I also want to be there, right? So it has worked quite well in a lot of geography. So this would be great, but
Yeah.
it would take a bit of time. Yeah.
Understood. Yeah, no, I remember this growth platform, which kind of keeps coming up every few years, and they want to kickstart to life, and somehow it's kind of fizzles out. And
Yeah.
yeah, I get what you're saying. All right. So so just another question, right? Since you mentioned this instruments as well as the investment stage, and we already tackled the question. So, like, it's possible for the same business to go through different stages and have different instruments at different stages, like meaning starts with a grant or crowdfunding, and like goes to a certain stage, and it goes, and then it attracts venture capital, and then it attracts. So it's the same business can go through different those things. That's also possible. Is that right?
Yeah, not just at different stage, at the same time also, they may get multiple capital, right? So that's the blended capital they may need to raise. For example, at the very early stage, to enable anything to happen, you may need grants in certain line of business, because otherwise there cannot be R&D, there cannot be this understanding of the market and all that work that may be needed. And yeah, as they slightly move on, maybe they need grant for certain kind of work, but they may raise some money from an social impact investor, who not just gives money but also looks at how should you go about doing this in a socially right way, right? Like, with the right governance and impacts measurements and all of that. At the same time, the startup, the enterprise may be raising money from a more regular angel investor also, because they bring with them the business skills and all of, because we do want the double bottom line, right? Not one at the expense of the other, right? So there are startups that do raise impact money, non-impact money, grant, and various other loans, or other offers from banks and other organizations, from governments, from found it. So yeah, it's all sometimes needed, and it makes sense, and that just may be the right mix for them.
I understand. Understand. So I think you still have a few slides, and we have questions coming. So why don't we finish it, and then I'll talk.
Sure. Okay. So this one, I'll make this a separate section, and the next one is just a closing one on why this is all important. Um, so metrics is a very, very important, but ill understood area of work. And I would start to say that this may be where then there is a Nobel Prize waiting for anyone who wants to do some work and show something that really works in this space, in the development economics space. So this is one example of from Avishkar, which is a very old a fund that has been in the market in India. What they track and write, what they sort of report, some of it may look like things you would expect from a regular fund, like, for every dollar invested, how much more dollars has been, leveraged from the market, and how many clients have been saved, which would be seen as, right, what is the scale. But then the color here is, we would get down and say, well, so many people were say, how many of those are from disadvantaged groups who may otherwise not have access to this product or service, if it's like a loans or some credit that is made accessible to someone who is normally denied credit. Or it may be like, depending on the lens they have, is it a gender lens to say how many women, or if it is livelihoods, how much livelihoods has it enabled, and if they also have like people with disability lens. So you just get a bit finer into the questions you are asking and the data you are collecting and what you're measuring, and saying that, are we on the right path, or are we just getting some numbers without seeing the real results that we originally set out to do. And all of this all sounds great, but even accounting, right? I mean, simple thing as just your balance sheet, your P&L, and all that is prone to a lot of subjectivity, and there are all these standards and audits and so many confusions there, and engineering that happens to kind of make things look better than what they are. And if you think that is a problem, just multiply it by infinity, right? That's the scope here of what are you measuring, and right, how do you say something is an impact, and the second bottom line, and how much are you willing to trade off one versus the other, and right, are you just telling some stories that are anecdotal, or are you even able to gather the data from the ground and gather it at a price point that is sustainable, right? Because quarter after quarter, are you going to go and meet everybody and get this data and see what else is happening? For example, if you say that this product has saved so much money to the households, and what are they doing with that money? They are investing in, I don't know, like better education for their kids. If that's your theory of change on, right, what is the impact you're wanting to see along the way? How do you know that's happening? How often do you go measure? How much money do you put into this? I was talking to someone who said sometimes these cost like millions of dollars to go and evaluate and confirm this is what's happening. And so the focus is on technologies. Actually, that's also one more area of investment, is how do you create these technologies that make your impact measurement even possible and affordable and reliable and trustworthy? Those things are somewhat needed to make these ideas like uh, social stock exchanges reliable. Otherwise, people may report some data and say that so many people benefited with no very clear way to verify. And if you go down the path of auditing, it just could get very expensive, right? Even more than the money you put in. So that's the complication in this impact measurement bit. But people are trying very hard, and they are reporting a lot of numbers by putting a lot of effort and work, and come up with some really good tools and methods and frameworks that work for a specific sector, in some cases specific geographies and all that. So I can pause here and take questions on this, because this is a huge area. And like how funds do not invest in it, I
Right.
only invested one slide in this. Yeah.
Right. I think like one question kind of resonates with what you said. And they said the question is, how do organizations in social impact investing measure social return? Because it can assume many dimensions, and you mentioned like quite a few metrics here, whereas financial return perhaps has only one, right? So I think so social returns are pretty much like lots of dimensions, and financial returns has just one, right? So I think you know so I think it's partly answered with this slide in terms of what Avishkar does, one invested 3.4x and so on. I think in terms of challenges, I think you mentioned a few things, right? So startups, do they have the capacity to measure what investors want? You mentioned it's can be quite expensive. And projects, like what is the incremental impact rather than actual one? Meaning, like if the project did not happen, like do you know what would have been the baseline impact, right? So can you like what's the incremental nature of the impact, right? Is that something that startups measure or investors ask for, and how do they kind of go about that?
Right. So that's, the concept is called additionality, right? Like what additional thing that we do with this startup versus the other, right? One example I was giving was, if this were not there, what would they have, what was their alternative for them, and what is the difference this one has brought into their lives, right? And then you can look at different aspect of their life, right? How much did they save, and what did that saving lead to, right? Like, I mean, if they saved and that didn't lead to anything, was the saving even worth it, right? So that's the and we can go down this path a bit, and that's usually more the interest of the investors, and that's where there is a lot of work and support that's needed by for the social enterprises from the investors to get them thinking on these lines. Because what we have seen is that if you are able to provide those questions to them and
Right.
some help in framing those and actually implementing it on the ground through your partner networks, and this is where the role of the foundations or on ground nonprofits that are working in that community is quite helpful, right? They would be the ones who will be able to gather this data and analyze it by contextualizing it, right? We may be looking at wrong dimensions and all of that. And what we have seen is, if you are able to do that, it actually becomes a good selling point even for the startup when they go and try to make a pitch for their product or service in those communities, to say that look, we offer this. Yes, it costs so much, but this is what is the benefit, and this is what we have seen, and you may be able to do this, which just gets people not see this as an extra expense of why should I do this, but all the possibilities and backed by data, right? I mean, this is not like some sales pitch the social enterprise is giving them, but this is what we have seen, and here are some examples and some data on that, right? So yeah.
All right. So I have a like a fairly straightforward question for a change. Can you talk about grants from government in this sector?
So there is, I mean, in the Indian context, and in many countries also, where there is a lot of support offered for innovation and entrepreneurship and startups, there are different kinds of grant programs that are available at various levels, right? It could be like a government department, like defense or housing, those kind of department that offer some grants towards some specific work, like there was space related startup that got grants, or agriculture that gets grants. And state also want to, like, support startups there. Some of these come with very low, I should say, strings attached, as in what they expect of you. It's a bit of, look, we think this problem is important, and the way you are attempting it, and the team you're building around it is interesting. Go do this, and give us what you have done, right? And then after you've completed this, we'll release the next tranche, and so on. Like, the grants like the BIRAC, right, the bio side, they they have been very successful in getting good talent into the sector, because otherwise it would just be like, there is, I was running a not for profit, and then I have trouble raising some funds. I'm kind of moving here, and let me see if I can get access to these grants, right? I mean, that's not the because they may come from a slightly different mindset from the folks who have, I have a great business idea, and I want to see how these solutions also reach the other target, and right, solve some important problems as well, right? So that's the other side, and that's where grants are useful. They work, some, and some don't, as with anything else. Yeah.
Yeah. Yeah. Um, so we also have some students and candidates, right? So there is a question on if anyone wants to join an impact investment firm in this segment, right? What does the firm look for in the candidate?
So a little bit of understanding of this development language is helpful. And if they work in a specific focus area, understanding the issues there, or this may be a geography focus, or it may be a sector focus. For example, looking at more sustainable agriculture solutions, then understanding that a bit is somewhat helpful, not coming from the what are the business metrics to look at, but also the what are the problems we are trying to solve. Is it I don't know, food wastage sort of thing? Is it soil quality sort of things, right? That bit could be a little helpful over and above the finance, right? I mean, just whatever you need in a normal impact fund analyst thing, plus this is a bit helpful. Yeah. And that bit of um, empathy or that patience, right? Because none of these investments often pay off in a very short term. These are, often slightly long term. It's called the patient capital. One may need to wait and offer a lot more support than you would, right? There is no board meeting where you sit and ask, what have you done for me, right? I mean, it's a lot of working with them and building these connections and making things work for them, right? Because it's a joint goal. Yes, you assume they are working on their financial side of things, but you kind of have to help them on the other side a bit. Yeah, otherwise your goal is not going to get met. Yeah.
All right. So you have like one or two
One more
slides.
slide.
Right?
One more slide.
Let's just get through
Okay.
that.
Okay. So this is the question on, okay, all this is fine, but why bother, right? I mean, why should I look at this as a segment of interest? Wow. Already we are at poll. Okay. So I think this is a very important asset class that is growing globally, as the data here shows. I didn't have more recent data than that. And in India, if you look at it, there is also a bit of shift, which I sort of want to point out. The amount is growing and all that, and it's there is a clear lack of talent in this space, because as I said, on one hand there are people speaking the development language, and then on the other there are people who understand finance. But what we need is to meet in the middle, to talk both, to create both, and that's not an easy job. And I always think the next growth or stage is in where two fields meet, right? Like fintech, right? Like you need to know finance, you need to know technology, and like that there are various, and this is one area where you do need to at least, if not know, be empathetic to the social issues, and then know finance, or the other way about, right? So just having one is not enough. And in the Indian context, we see a bit of shift. In the past, it used to be like microfinance, or any debt lending, that was all there was. But even there, financial access was an low hanging fruit that everyone was going after, but it's become a lot more nuanced into creating more technology, like be it in the climate tech solution, in actually in sometimes these metrics and governance and measurement, because that's a key area. Sometimes data can create this democratization, and tech, as we see, like cell phone could be one example of, right, how tech has democratized access for a lot of people who otherwise lack things. And like like a geo internet, right? I mean, tech is a great enabler for development, and then that offers that, and that offers a lot of investment opportunities with this double lens. So this is really an exciting, we are in very early days. I mean, you see the size of this opportunity. While some may think, oh, that's all, I just think it's a very sunrise segment to look at, and there is a lot of opportunity for finance professionals to match what the problem is to what the enterprises are offering to what the investors' goals are, right? Like they may have different time horizons of 10 years, perpetuity sort of thing, or very short term. What is their return expectation, and what is the kind of risks they may take? Are they willing to take some geographic risks? Because you may go to a country which may face some political or other issues as well, because work is needed there, or some sectors which may face some government, right? There's a lot of this policy overhang always there in the segments. How much risk appetite you have and how much comfort you have in taking those on and all that, right? So that's where there is a large role of finance professionals out there, and I'll stop there.
All right. So I just had to, so there were a couple of questions on metrics and quantifying measurement, right? And you have spoken about it, right? Some examples and whatnot. Can you, I'm probably going to put you on the spot. Can you take one example of a metric, right? So I think, for example, this many metric tons of carbon emissions saved. I saw that one. And then I saw these many 575,000 jobs and livelihoods created and so on. Can you take one metric and actually walk us through how they actually calculated that number, and what kind of assumptions go into that measurement?
Right. So this carbon emission is one important and interesting area where there is a lot of work, because these carbon credits could be sold in the market, right, for money. And then for some social enterprises, like if you are a cook stove maker, for example, selling cook stove is just part of the money, but then the carbon emissions saved, if your cook stove is more carbon efficient, is credits that you can sell, right? And there are various examples of carbon credits that you can earn. And in those cases, we can't hand wave and say, you know what, I think on average sort of things. There is an engineering and understood methodology that one needs to follow to come to that number, because someone is probably paying for this, and even if they are not, you better start to follow these metrics. So I'll give one example of one wastewater treatment solution that just does not use electricity, and then you kind of say, okay, in the market, what is the electricity use for such a device which is doing sewage water treatment. And this quarter we treated so much sewage water. Here is where, to your point of assumptions, there could be some assumptions to say that, look, I installed a 10 kiloliter per day unit. Who knows what it is treating on a per day basis? You sort of have to assume, it's treating at least 75% or, some number there, right? And then maybe it is only 60%, but you're assuming 75%. Maybe it's 90%, you're assuming 75%, right? This is where the tech is useful to say, you actually have an IoT that actually measures how much is getting treated, right? That's sort of the next step, right, where I said tech is important to get to that accuracy of your estimates. But to the first degree, you said that's what I'm taking, and hence a unit of electricity based on the mix of how electricity is generated in that state, right? One can get to that level to say that in Tamil Nadu it's more renewable than coal. If somewhere else it's more other way, right? And then say this is what I'm saving, and then say that as that's the level that we go to say this is the carbon emission saved in that particular example. And yeah, each one we can do that. And yeah, as you see, this is huge work, right? And then you have to go back and review, is this all true, right? And yeah.
All right. So basically, and the people who disclose this, so much electricity saved, will list out their assumptions on how they actually calculated, right? So just at least you can test or question the assumptions if you have a problem with what they are saying, right? I have a question here. The asker, the person who is asking, is a professional already engaged in banking sector, experience in priority sector lending, which supports social causes and social entrepreneur, as also a charter holder. What should the person expect from social ventures on a practical side, considering career prospects, and what are the expectations from such professionals, right? So I think, let's say if a person goes from banking, he's already engaged in priority sector lending and supports on this thing, and he switches his career to, let's say, on the other, the social venture side, right? So what kind of expectation, what kind of changes the person should expect, or what kind of career prospects the person should expect?
See, there are lots of organizations that are looking at different, let's say, we say we are not going to equity, right? We are kind of looking at this world of debt and sort of quasi debt, which is this area called blended finance, right? So what we do see is, to give one example of the sort of prospects beyond, right, coming up with instruments and measures that one can have for, like, I don't know, lending small tickets and making that sort of sustainable and viable without a lot of overheads, and assessing credit risk, right, in this environments which are, new and not sort of sorted, and making some assumptions there, and right, how do you do those? There is this whole area of blended finance, which is, many of these enterprises are not so suitable for equity, nor can they pay debt, as in, like, they can't make EMIs, right, on a regular basis. So you just need to come up with a bit more flexible debt kind of structures, where you say, look, I look at your pattern of, your seasonality, or your, structure of what is happening, and then I will structure my debt to be a bit suitable for you, so that you're not going into default, and we are, being serving both our purposes, right? So those are, emerging areas where one can look at for and there are courses and all that one is offered. And likewise, there is also this whole area of green finance, and right, loans given to green enterprises, and right, that's one more area to look at. So I think there are courses one could take to understand the metrics and language and, terminologies over there. And then, yeah, there are lots of opportunities in India and globally in this.
Right. So, and like, we are coming towards the end of it, and it's my usual favorite last question. So what should, how should government, or like, regulators, policymakers, right? Like, what kind of support they could be doing additionally? I'm sure, like, you mentioned some of the government grants and schemes and those kind of things, the social stock exchange and so on. In your opinion, are there anything that government could be doing more? So you mentioned 7 billion in impact funding. So is there anything that they can do to kind of help scale up that segment?
I think sometimes, many investors, so what helps the sector is, okay, so you need to create that positive cycle, right, to say that, look, people see that this is a good opportunity for to start a business in, and to grow and whatnot. And then and there are good enterprises, and then investors do come in, and right, investors come in, and and they put in money, and right, this creates, and that attracts more enterprises and good professionals, because there is money and salary and whatnot, right? So now, where does this cycle not take off, and where this flywheel takes a bit of time to gather steam and go, right? So where can government help, right? So where they can help is to be a little proactive, that we all remember the microfinance crisis sort of things, right? That it was like, really getting very hot, and then huge crisis happened, then so that kind of breaks the trust for people. So it helps, while we may not like the regulator getting ahead of the innovation and the business and saying, like, thou shall not, right? But in some cases, that insurance, or that protection, that someone is watching over, that there will be no excess in the system. And as an investor, as an enterprise, I know I'm sort of going in the right track, and right, I don't have to worry, is a great role that a regulator or a government can play. Yeah, I wouldn't call it like government, but yeah, it's like a regulatory thing. Yeah.
All right. All right. So I think, we have covered quite a bit today. So I want to thank you so much for sharing us your insights. As a reminder to our listeners, please complete the evaluation survey that appear on your screen. If you haven't already done so, CFA Institute and CFA Society members may claim professional learning credit by logging in their online professional learning tracking school, learning tracking tool. I'm so sorry. And there are upcoming webinars. Please register if you haven't done so already. We have one on the 8th of September, Career Insights, how new business models are changing career paths. The speaker is Rajesh Sehgal, CFA. The registration link, you can either scan it on the screen or we will share it. Thank you for participating in today's webinar.